Hello, everybody, and thank you for joining my HR Counsel for the second episode of our third Tuesday webinar. This month, we are covering exempt versus non-exempt employees, and so we're waiting for a few people to get joined here, but I am going to get started to keep everything flowing. We do have quite a bit of material to get through today, so I want to make sure that we have time for all of the slides and if anybody does have any questions. My name is Janelle Stanton. I'm the Director of Communications here at myHRcounsel. A lot of you have heard me speak before, so are familiar with me, but for those who aren't, I am an attorney on our team, and I do advise small and medium-sized businesses predominantly on employment, business, and corporate law issues. But I do also do our business development, marketing, and speaking engagements that include employer training. This is really one of my favorite parts of my job. I get to help folks like you make sense of these crazy employment laws that just seem to change constantly. So with that being said, I just want to go over our agenda, but then also hit some of the housekeeping items, again, while people kind of get logged on and get settled here. First of all, if there are any questions, there is a box where you can type those questions in the window there. If you have questions as we go through this, just feel free to type them. I may address them if they're not appropriate timing at the end of the presentation. But and just so you know, everybody who does attend will receive a recorded copy of the presentation along with the presentation slides. So our agenda, I'm going to go over some very important definitions. The Fair Labor Standards Act, the FLSA, which governs exempt versus non-exempt employees, is full of definitions, and I'm going to keep this very straightforward and to the point, but getting a good grip on some of the definitions to start with is very helpful. We're going to go over what I consider the number one principle to remember. We'll discuss the three-part test, and then we're going to talk about the key to deciding whether an employee is truly classified as exempt, which is their job duties. Like I said, this presentation is going to be recorded. We will send this out to all of the attendees if you want to share it with anybody else on your team, but please know only those who are in attendance and stay for the duration of the presentation will be able to get the HRCI credit. Once I get the information pulled together and the presentation downloaded, I'll be sending out the code to you so that those of you who need to have those continuing education credits can get your code to get the credit for this presentation. I do also always send out Q&A. So if there are questions that I get during this presentation, I will send out a typed up version of the Q&A. You'll get a brief survey. Please, please, please consider completing it. It's about 6 questions. It won't take you very much time at all, but it lets us know how we're doing and also lets us know what topics you would like us to present on. After the presentation in January about onboarding, I got 4 or 5 people asking for this topic. So many people ask for it, so we are delivering it. You'll also receive our exempt employee checklist. So this checklist is meant to walk you through each step of determining whether an employee is really exempt. So that's something that you'll be able to take. You can make copies of it and just use it to walk through the analysis of whether your employees are exempt or non-exempt. So another thing before we get started, but I just want you to please remember that the business of properly classifying an employee as exempt is a highly fact-intensive question that really can only be decided by doing an in-depth review of what duties an employee actually performs on a daily basis. So it really is not possible for me to tell you during this presentation whether an employee's job title is exempt or non-exempt, because that inquiry really rests solely on the specific daily tasks of each employee. And this is super important. There's figures out there that the Department of Labor, in fact, estimates that 70% of employers are violating the Fair Labor Standards Act in some way. So getting classifications regarding exempt versus non-exempt employees is crucial, because the penalties can be very large. And that's all information I'm going to go over as well. So jumping right into our content here, I want to take the time to first clear up some definitions, because I would say that this is one of the most common things I counsel employers on weekly, if not daily. I always hear some type of question that goes like this. We have an employee who's salaried, so I'm not sure if I can deduct money from his or her salary because they missed half a day. Or we have an employee who's salaried, but they are, they had an injury, and so we want to deduct money from their pay. Can we do it? That's not the right question to be asking. The question is, we have an employee who is exempt, fill in the rest of the question, because the real inquiry is exempt versus non-exempt. It is not salaried versus hourly. A non-exempt employee can be paid on a salary basis, and that's 100% appropriate in some situations. So just because an individual is paid a salary does not make them exempt from the Fair Labor Standards Act requirements here. So remember, while the non-exempt employee can be paid a salary, an exempt employee cannot be paid hourly. It would cause the employee to fail that salary basis test, which we will also get into. So it's not salaried versus hourly, it's exempt versus non-exempt. So just kind of keep that in mind. So as far as some of the additional definitions here, non-exempt employees. So a non-exempt employee means that that employee is not exempt from the minimum wage and overtime requirements of the FLSA. So in other words, a non-exempt employee is subject to minimum wage and overtime requirements. So non-exempt employees, if they work more than 40 hours, the employer has to pay them overtime. So they also have to be paid whatever the state or federal minimum wage requirements are. That is what a non-exempt employee is. A non-exempt employee is not an hourly employee. They most likely are, but non-exempt really means that an employer has to comply with all of the minimum wage and overtime requirements for that non-exempt employee. On the other hand, an exempt employee is not covered by the minimum wage and overtime requirements. So in other words, they are exempt from the overtime requirements. So if an exempt employee works more than 40 hours, that employer does not need to pay that employee overtime. And I think that this is really the best and what most employers are looking for in trying to classify an employee as exempt, is the ability to have them work many hours without having to pay them overtime. And attorneys are exempt, so I live this every day. But and I want to point this out because I get this comment all the time when I'm assisting a client with determining whether an employee is exempt or non-exempt. It does not matter a lick what is common practice in your industry. Just because this is how everybody else classifies project managers or foremen on construction crews or any other type of job in your industry, just because that's standard industry practice does not mean that they are not doing this incorrectly. What it means is that they have not been busted by the Department of Labor or the state version of the Department of Labor. So do not feel that industry standard creates new exemption rules for you. It does not. They still have to meet the test that's set out for exempt employees. Okay, this slide is very, very important, which is why I made it huge. The number one most important principle to remember is all employees should be considered non-exempt. There's a very popular saying out there, and it says, people are born non-exempt. Just go ahead and assume to be as safe as possible, that literally every single one of your employees is non-exempt. The only time you can say that an employee is exempt is if you can squeeze them into one of the exemptions. And if you kind of change your way of thinking as, okay, everybody is non-exempt, unless you can squeeze them into the exemption. That is going to go a long way, a very long way, to making sure that you are not making these improper classifications. There's a lot of non-exempt jobs, and I would say that they are most of them. And typically they're non-management positions that are paid overtime. Construction workers, production line workers, janitors, wait staff, file clerks, most administrative assistants. The list goes on and on and on. So unless you really can fit all three of the tests here for whether an employee is exempt, then they really need to be non-exempt, paid the minimum wage at least, and get overtime for any hours they work over 40. So very, very important. If you can meet the salary level and basis test and duties test, you have to meet all three prongs of this test. If you can meet all three of these prongs, then you can classify somebody properly as exempt. All right, so let's go through the test piece by piece here. So the first test is the salary level test. So this, while it seems very straightforward, was kind of made murky. For those of you who have been hanging around myHRcounsel for a while, you probably would have sat in on one of our updates to the FLSA presentations that we were doing back in 2016. The Department of Labor had issued a new rule which would have raised the salary level from $455 per week, which is what it currently is, up to $913 per week, or $47,476 annually. As most of you are aware, that was struck down by a Texas district court judge just 10 days before the rule was to take effect. So us here at myHRcounsel and a lot of the attorneys we know were just kind of beating people over the heads with prepare, prepare, prepare. Things are changing. Here's what you need to do to prepare. And then 10 days before it went into effect, it was struck down. So after that, a lot of you are probably familiar with the fact that the Department of Labor did file an appeal, but then they did also issue a request for new information for a new rule, and they started a new comment procedure. There's rules about agencies and their rulemaking authority, and essentially they have to accept comments from business leaders, industries, employee groups, and so they were accepting new comments. It does seem likely that this salary threshold will increase, maybe on the order of up to $33,000 annually, but it is possible that it will not go up to the $47,000 that it was expected to in 2016. So the salary level test, it's currently, you must pay an exempt employee $455 per week, $910 biweekly, or $23,660 annually. So that is the minimum threshold that you must pay an exempt employee for their salary. Just do be aware that there are state law differences. As always, you California employers are thinking that's probably us. It is you. The California salary level test is higher than the federal. And do be aware that there are some legal watchdogs and people on Capitol Hill that say that if the 2020 presidential race does go to a Democrat, we might get back up to that $47,000 figure. So this salary level test may change, and it likely will. It just may not be up to that 47,000 figure. All right, the second component of the test here, so salary level, very easy. You got to pay a certain amount. The salary basis test is definitely easy as well, not maybe as easy as a salary level test, but the salary basis test, you have to be able to say yes to all three of these bullet points here to satisfy the salary basis test. And so an employee has to receive a predetermined amount of pay each pay period. So it's got to be $1,000 bi-weekly, or whatever the minimum threshold. I can't remember the bi-weekly. It's on the previous 19.7 or 9.10 bi-weekly. So $1,000 bi-weekly. Great, you meet the salary level test. So the pay has to remain the same for each pay period in which that employee gets paid. So that predetermined amount cannot be reduced if the employee doesn't work a certain number of hours, or if they don't produce a certain number of widgets, if they're a production line manager or something like that. It can't be reduced based on the quality or quantity of work. And if you make improper deductions of an employee's pay, the company is put at risk for losing the exemption for all employees that are in that particular job. So as an example here, this is an example that the lawsuit has been brought in, it's not been resolved yet. So an employer, this is local, required that its managers, who arguably did not meet the executive exemption anyway, required their managers, store managers, to work 50 hours per week. That was the minimum they were required to work. If the employee did not work that full 50 hours, instead of being paid their predetermined salary, the employee's pay would be converted to hourly and would be paid for the number of hours that they did work. So if they worked 41 hours, they would convert the salary to an hourly pay and pay for 41 hours. Well, you cannot reduce pay based on the number of hours worked. So what happens is this employer loses the exempt status classification for those employees. And they were paying all of their store managers in that way, and they had like 6 locations. So we're talking maybe a dozen employees who were subject to illegal pay deductions here. And so the penalties for this employer could be huge, because remember that violations of the FLSA carry a 2-year statute of limitations. So that means that if an employee brings a claim against your company because you've made improper deductions, as an example, they can go back 2 years and look at any overtime that you worked in the last 2 years, reward you that overtime multiplied by 2. The Fair Labor Standards Act has what's called a liquidated damages clause that essentially means whatever the past due overtime figure is, it doubles. So if you owe the employee $2,500 in past due overtime for the past 2 years, the employee is going to get $5,000 out of you, plus attorney's fees if they're incurred. So these penalties can really start to add up when you think about they're going to go back 2 years, 3 years if they think that your conduct was willful, or basically that you were doing it on purpose, you knew it was wrong. So it could go back up to 3 years. And that's going to be for each employee. So that the risk of making these improper deductions for exempt employees is very, very high. And I think we have a question about this. One second. Okay, so one of the questions here is what happens if you reduce pay because the employee has used more than their personal time off and vacation time? If you can make deductions potentially in full day increments, but you cannot make them in partial day increments. So if it's for a full day, that's one thing. If it's for partial days, that is not acceptable, not an acceptable deduction. One of the biggest issues with misclassification is this issue of past due overtime. So just know that these damages can become very large. You also cannot make a deduction from salary if an employee is able to work, ready, willing, and able, but there's no work available. So if there's nothing for that employee to do, but they're able to work, you cannot make deductions from their pay for that either. So that would be considered an improper deduction. All right, duties. This is by far and away the most important of the three-part test and where most employers go wrong. The problem with the duties test is all of these tests are nebulous, right? It says, there's things like the primary duty must be the performance of non-manual work related to the management or general business operations. Well, what does that actually mean? So the duties test is, I think, the probably most difficult prong of the test to determine. And the big thing that you have to look at is what is the exempt employee's primary duty. So when you look at the job that they perform as a whole, the principal, main, major, or most important reason that the job exists has to be to perform exempt duties 50% or more of their working time. So it's highly possible that an exempt employee performs non-exempt work from time to time. You may have a store manager who, because they're short-staffed, might otherwise be a properly classified executive employee, but maybe they were out folding shirts and running the cashier for an hour of their 8-hour day because they were short-staffed. So a non-exempt work can be performed up to 20% of the time, but really making sure that the performance of non-exempt work is falling well below 50% and definitely below 20%, super important. I like to ascribe to the 80-20 rule where an exempt employee is performing exempt duties 80% or more of their working time. It fits with your 80-20 model here and is going to make sure that you are really properly ensuring that the exempt employee is performing exempt duties. So just want to hit that point home because you may even have highly paid employees that are well over the $23,000 salary level threshold, but they are not exempt if their primary duties are not exempt in nature. So you can see that what job the employee is actually performing is very, very important. I'm going to hit the high points of a few of the exemptions here. Just know there are others, but these are the administrative, professional, executive. These are the three common what's called white-collar exemptions, and the ones that are used, I would say, the most. So the administrative exemption, for an administrative employee to be properly classified as exempt, that employee's job duties and position has to meet both prongs of this test. So they have to perform office or non-manual work that's directly related to management or general business operations. Well, what does that mean? So this is basically when an administrative employee is performing work like tax, finance, accounting, quality control, purchasing, advertising, marketing, personnel management, human resources, labor relations. There's a lot of other activities that can fall into this area. Those are just examples. List is illustrative and not exhaustive. So they have to perform this office or non-manual work. They also have to be able to exercise discretion and independent judgment regarding significant business decisions. So while that might sound clear-cut, whether an administrative employee exercises that independent judgment and discretion is really the crux of most FLSA litigation. That prong of this test sparks more litigation than any other prong of any other test. And the reason is a lot of employers want to pigeonhole employees into this exemption because it kind of seems like the easiest one. But that is a huge mistake because, again, 2 years worth of back overtime times 2 plus attorney's fees. This is not something that you want to get wrong. Administrative assistants are frequently misclassified. Many employers classify bookkeepers or entry-level engineers, entry-level project managers as exempt, even though it's probably not likely that they are using independent judgment, and probably what they're doing is applying well-established business techniques, procedures, procedure manuals or specific standards that are in manuals or other sources that they were given. So that ability to exercise discretion and independent judgment is very, very important. And some of those things, whether the employee has the authority to form, interpret, implement management policies, whether they carry out major assignments, conducting the operations of the business, whether they perform work that affects business operations to a substantial degree, whether they need approval. If they can act on their own and don't need to get prior approval, that is going to go a long way to saying that, yes, this employee is probably properly considered an administrative exempt employee. So the test is 2 parts. There's a lot more that goes into that analysis, but I just want you to be aware of some of the nuances with this particular exemption because, like I said, this is one of the most litigated exemptions of the FLSA. The next exemption that I'm going to cover is the executive exemption. This is probably the one that's used second most and maybe messed up the second most amount of time. Again, an executive employee has to meet all 3 of these particular prongs. So their primary duty has to be managing the enterprise, the entire enterprise, or a recognized department or subunit of the enterprise. They have to customarily and regularly direct the work of at least 2 or more full-time employees. And they must have the ability to hire or fire employees, or if they give recommendations about, yes, we should hire or fire this particular employee, those recommendations are given particular weight. The problem here is many companies consider anybody with the word manager in their title as exempt. That is a huge mistake because there's many misclassification challenges out there that involve claims that assistant managers, mid-level managers are exempt, but really they don't have enough managerial responsibility as part of their primary duty to fit into the executive exemption. I've got an example for you. It involves me. When I was in law school, I worked for I will not name them, large nationwide clothing retailer. I was an assistant manager while I worked there, And my primary duty was to direct the work of the cashiers and everybody else working on the floor, folding clothes, putting things back on the racks from the fitting rooms. That was my job. So what I really did was I scheduled breaks, told people when they could leave early, asked cashiers to fold clothes when they weren't checking people out, told people to please go back to their cashier because there was a lot of people in line. I did not manage a department in any meaningful way. I also had zero authority to hire or fire, and nobody cared about my input on that topic. So I was not an exempt executive, but I was paid as an exempt employee though. So even large nationwide clothing retailers get this wrong. The primary duty is management. Some of the things that would make somebody think, okay, that this is properly a properly classified executive exempt employee is, management. Are they interviewing, selecting, and training employees? Are they adjusting rates of pay or work hours, setting the schedule? Are they planning and directing work tasks, maintaining documents for performance evals? Are they doing interviews, addressing workplace complaints, budgetary decisions? Are they making decisions about how money should be spent and oversight of the budget? Are they monitoring and implementing legal compliance measures or ensuring employee safety? These are factors that would tend to show that somebody is engaged in managing an enterprise or a department. So again, highly fact-intensive question as to whether somebody's specific role will fit this, but just a few kind of guideposts for you to consider when you're analyzing that. The last of the major white-collar exemptions is the professional exemption. This one really isn't used as much. It's a little bit more clear-cut, I would say, than the first two. But essentially, for a professional employee to be classified as exempt, that position has to meet all three of these bullet points. So their primary duty has to be performing work that requires advanced knowledge. So that's work which is predominantly intellectual in character and requires consistent exercise of discretion and judgment. So this might be, somebody who is a lawyer, a doctor. It can involve people who are in fields of theology, accounting, engineering, architecture, teaching, biological sciences, pharmacy. There's also, in addition to the learned professionals, there are creative professionals, which are exempt as well. This is when an employee's primary duty requires invention, imagination, or talent in a field of artistic or creative endeavor. So actors, musicians, composers, soloists, writers, cartoonists, those types of professionals may be considered a creative professional. They also have to have advanced knowledge in a field of science or learning. So this is going to require more than a high school diploma. So they have to have some level of advanced knowledge in that field of medicine, accounting, architecture, et cetera, for them to fit into this exemption. And typically the knowledge is acquired by lengthy specialized intellectual instruction. So college or some type of post-secondary education. But like I said, for example, like the practice of law or medicine. So somebody who has a valid license to practice law or medicine is going to be exempt as long as they're actually practicing in that field. So again, that would be me. I'm exempt, which is okay. Like I said, those are three of the more common exemptions. There is also computer-related exemptions, outside sales. We hear of a lot. Outside sales being people who work away from the office. They do not work in the office and are basically making sales and collecting purchase orders outside sales. Inside sales, not exempt. Educational establishments and administrative professionals. There is a specific exemption for highly compensated employees. And then some others, there's seasonal employee exemptions, agricultural exemptions. There's a whole host of other exemptions outside of the first three that I discussed. Something else to be aware of is that there are state differences in exemptions in both what the duties tests might be, what exemptions are recognized, what the salary levels are. And remember that if you're in a state, city, or county that has a law that is more employee friendly than the federal rule, which usually just means that the test for exemption is harder to meet or more employee friendly, then that state law exemption is going to overrule the federal. A couple of examples here. Minnesota, which is where I hail from, does not recognize the computer professional exemption or the highly compensated employee exemption. So if you're in Minnesota, the Fair Labor Standards Act, the federal law, recognizes those, but Minnesota does not. So Minnesota law will trump here, and you cannot use those in the state of Minnesota for an employee. Like I said, there's industry-specific exemptions, like for agricultural employees, seasonal workers. Of course, California always has to be different. I'm always picking on California, but I do love you guys. You guys keep us busy. California's salary level test requires that an employee earn at least double the state minimum wage. So it's $4.80 per week instead of $4.55. It's not a huge difference, but it is a difference. And so because that is a more employee-friendly provision, employers would be required to then pay $4.80 per week as a base level over the $4.55. So some of the most common pitfalls that we see is, number one, always classifying salaried employees as exempt. Salaried employees are not necessarily exempt. I touched on that at the very first part of this. That salary test is only a third of the equation. They still have to meet the duties test. So, you can have a non-exempt employee be paid a salary. That's not a problem. So salaried employee does not equal exempt. You have to make sure that they also meet the duties test. Let's see, I've got another question here. Okay, so I do have a question here. Wondering about a auto salesman. If they work internally on your lot, they are not exempt under the outside sales exemption. Another question here is there a maximum hours worked per week requirement for an employee to be classified as exempt? No, they're not required to work a minimum amount or a maximum amount at all. Just reading through a couple of the other questions here. All right, carrying on. I will address any leftover questions at the end here as well. Another common pitfall is always classifying supervisors as exempt. I just kind of covered that, but primary duty is the key factor. A shift supervisor, for example, who might just be a lead cashier, is their primary duty really the supervision of other employees? Is the employee more akin to a lead foreman who works alongside others, or are they really a manager who oversees a department? So you've got to look at that duties test. Not anybody who is a supervisor or manager is exempt. And in fact, many supervisors are not exempt. A lot of them just simply perform too many non-exempt duties, and it overrules that 80-20 rule that I talked about. Another common pitfall is classifying employees based on job descriptions or titles. I cannot tell you based on a job description or title only whether an employee is exempt or non-exempt. Job descriptions are important, but they're really only a single factor. The Department of Labor or court, which hopefully you never have to talk to about this, but they're still going to look at what the actual job duties performed are. I talked to a client yesterday who signed up for our service yesterday, who had the Department of Labor coming in to audit their non-exempt, exempt employees today. A little late for me to be able to help out much, but one of the things that the Department of Labor was coming in to do today was interview their exempt employees. And they're going to interview their exempt employees and say, what do you do every day? And when that employee says, well, I get in, I make coffee, I look at my emails, I write some letters that were dictated, I schedule meetings, they're going to go through all of those things. And when the Department of Labor gets done and says, well, this is what you do in a day, your job description says you do all these other high-level things, but you're really not doing that in a day, are you? No. Do you ever work any overtime? Well, yes, of course I do, because every employee will tell you they work many, many more hours than what they actually do. So then you're looking at, okay, well, the Department of Labor is saying this employee is not engaging in exempt duties. They are saying they're working overtime, and clearly they're not getting paid it. You start writing a check pretty quickly in that situation. So make sure that you are classifying employees based on what it is that they do in a day. And then I would say probably one of the other ones, again, making deductions from exempt employees' paychecks, because again, exempt employees have to be paid that guaranteed base salary. That salary cannot fluctuate from week to week. You can't deduct for late arrivals or early departures, poor quality of work, etc. Those are improper deductions. So that, again, is an area where I would say employers are getting themselves into quite a bit of trouble. And one thing to note, employees are a lot more savvy than they might have been in the past. Because of that update to the salary level, the one that ended 10 days before it got started, that was very highly publicized. And I know as an attorney, I saw that and I was surprised to see it bandied about on social media extensively. So there's a lot more employees that know their rights than they did before. So all it takes, and my client who, like I said, is got the DOL in their office camping out today, all it takes is one disgruntled employee to get fired. Be upset, call up a lawyer who's then going to dig into any claims that might get that lawyer attorney's fees, and they are the perfect target for FLSA violations because attorney's fees are part of what damages you can be awarded. So again, those are some of the most common pitfalls that we see employers kind of making as it relates to FLSA and exempt and non-exempt employees. Okay, so now that I have sufficiently freaked you out, and I'm sorry for that, but this is super, super important, how to stay on the right side of the law. And the biggest thing here is to audit your job descriptions and classifications. And you're going to say, what? You just told me the job descriptions don't matter. They don't. But if you audit them, you have to make sure that the job descriptions fit what the employee actually does in a day. The best way to make sure that your job descriptions fit what the employees are performing is to do what the Department of Labor is doing to my poor client today and sit down with your employee and interview them. Tell me what you do every day. You should probably let them know they're not getting fired today and, maybe give them a little bit of reassurance that it's okay, you're not getting fired. But interview them, ask them what they do, tell them you want to make sure, it's just part of an overhaul that some lawyer made them do, blame it on the lawyers. It's always an effective tactic if you ask me. Interview them, make the job description fit what they do, not the other way around. And don't just give titles and expect employees to be exempt. Like I said, the duties really have to match what the employee is doing. And I mean, that is going to be the biggest and best way for you to ensure that your employees are exempt. You also have, I'm going to be sending out to everybody in attendance the exempt employee checklist. This is a checklist that you could literally print out, make copies of it for each exempt employee that you have, and go through and say, do they make $455 per week? Yes, great. Do they get paid a set amount every single twice a month, however often you pay? Yes, great. Okay, perfect. And then get into the duties test. So, okay, we think that they're an administrative exempt employee. Are they going to fit this first prong? Are they going to fit the second prong? If you miss any components of that test that's on that exempt checklist, they're not exempt, and you have to change that. You've got to change that classification. Switch them to non-exempt. This is something I can help you with. If you want to know, okay, I have to change this employee to non-exempt, how? You will call your friendly neighborhood lawyer like me, and I will help you analyze whether an employee is exempt or non-exempt. I will help you devise a plan to communicate changes, because that can be very difficult. Employees, if they're exempt, they carry a certain, pride in that, and it's considered often, I think wrongly, but often is considered, to somebody who is exempt is considered more of a higher level employee. So if you change them to non-exempt, hourly employee, I'm using air quotes because they're not hourly, they're non-exempt, they might feel like it's a demotion. I can help you with that. I can also, like I said, help analyze your job descriptions and help you come up with a plan for how to analyze that. So we are here to help, and lawyers can help you do that analysis with attorney-client privilege, which is going to be very important, because if you tell me we've got 7 categories of employees that I think are probably not exempt, when you tell that to me, we have attorney-client privilege. That information is not going to be discovered if you do have one of your employees go sue you. So just be aware that consulting with a licensed attorney who can provide attorney-client privilege protection to you in doing this analysis is going to be important. And like I said, that's something that we would be able to help you out with. Okay, so I think I've got a number of questions here. So let me just kind of scan through, make sure I'm getting them all. Okay, yes, you will get a copy of the presentation. We do not have SHRM credit. We have HRCI credit. Yes, the slides will be available. Got that one. Somebody's asking about the professional exemption. If someone that does not have an accounting degree but is an enrolled agent and handles payroll filings and registrations, are they going to meet the exemption? Again, these are very fact-intensive inquiries. So it's not possible based on just a quick, here's what an employee's title is, for me to determine and tell you right offhand that yes, that is somebody who's exempt or non-exempt. But remember that exercise of discretion and independent judgment is important. If somebody is a bookkeeper and they're just taking well-established techniques, manuals, procedures, and they're just doing rote accounting tasks, they're probably not going to fit either the professional or the administrative exemption. Again, that's something that we would have to analyze all of the duties that that particular individual engaged in every day, but it's possible that they are not. I answered that one. Can you do a full day deduction for a salary employee for sick or PTO? Yes, absolutely. Full day is the gold standard. Can you get a copy of this webinar? Yes, you can. This is recorded, and when I send out the follow-up email to all of the attendees, a recording of the presentation will be in there. Can pay be reduced when PTO is not submitted? I'm assuming that's a procedure question about if they properly requested PTO. If they took a full day, that is okay. Somebody asked if these are the steps I should take prior to meeting with an attorney. And I'm assuming that's about the audit of the job descriptions, the interviews, things like that. That would be very helpful if you did go through some of that legwork before you contact an attorney. We are going to make you do that at some point anyway. We don't know what your employees do every day, so having a nice census of your employees and what they're actually performing day to day is going to help us be able to determine whether they're exempt or non-exempt. So if you do it prior to consulting an attorney, great. If you don't, that would be one of the steps that you'd have to do. Let's see, I'm just making sure. Somebody's asking about allowances, like a car allowance. Can that be deducted? If it's not part of their pay, this is something that, again, there's some really persnickety rules on this. So I will put this in the FAQs, the answer to that particular question, as about if you can deduct like a car allowance. I'll include that in the FAQs that I send around. All right, any more questions? Keep them coming. We've got a little bit more time here. Somebody's asking about my comment that it destroys the exemption and what that means. So if you have an exempt, an employee that you're classifying as exempt, so you're not giving them overtime, they're not subject to minimum wage requirements. So if you have an exempt employee and you make improper deductions from their pay, let's say like the example that I gave of the lawsuit here in the Twin Cities, if that happens, then any employee in that same job category, so this, remember from the example, all of the branch managers were considered exempt and were subject to this payroll pay deduction practice. All of those employees have now lost their exemption for the last 2 years. And so think about it. That company has been requiring 50 hours of work every single week for the last who knows how long their practice went on for. So I'm guessing most employees probably worked more than 40 hours, so they lose that exemption. And each one of those branch managers is now considered non-exempt and should have been paid overtime for any hours worked over 40. So the exemption is lost. And that's what that means, is that now they are considered non-exempt and must be paid any overtime that they worked in the previous 2 years. Good question. I know that's kind of a confusing principle. All right. I don't have, wait a minute, here we go. If you're, so the question is, what is the salary rule for non-exempt employees and overtime if you are paying them a salary? So you can do this. You can pay a non-exempt employee a salary, but what you'll have to do is you will have to do some calculations to determine, so you'll take that weekly salary, divide it by the hours the weekly salary was intended to cover. So the employee receives that hourly rate for every hour up to 40. And then you multiply that times 1.5 for hours worked over 40 in that week. So basically, you have to take that weekly salary and divide it by the hours that salary was meant to cover, usually 40. Then you come up with their hourly rate for every hour they worked up to that 40. And then you have to do that time and a half calculation for if they worked 45 hours, then you have to take that hourly rate multiplied by 1.5. So that the calculation it's something that can be done, but you have to make that calculation to come up with the regular rate of pay. And I will say again with this question, there are many small nuances with the regular rate of pay, and there's fluctuating work week that has special rules, so there can be more complexity that goes into that, but essentially you have to figure out that regular rate of pay and multiply that by time and a half. Okay. If you determine you are paying someone incorrectly overtime and fix it now going forward, are you liable for all past overtime? What is the best way to explain to the employee? So, are you liable for past overtime? Yes. If the Department of Labor comes in, if you are sued, that 2 years going back is going to be subject to the overtime penalty. So technically, you would possibly be on the hook for that if you were to be turned in. The best way to explain that to an employee, this depends based on your company, your positioning. There's a lot of ways that you can do this. And I tailor my business advice based on your company, your experience, and how you handle your employees. And every employee is different. Some employees you have to tell it in one way, some employees you have to tell it in another. But one way that I have found is a good way to communicate these changes is to couch them in, we are doing a number of changes across the board as far as our internal policies. So because of an audit that we're doing, we are now going to be reclassifying you, which is great because now if you work overtime, you're going to get overtime pay. So couching it as a change to the entire business in some way, like if you're going to do a new employee handbook and you're going to release a new employee handbook, doing a classification analysis prior to that, and so giving a new handbook along with changing people's classification from exempt to non-exempt. It's a really nice way to say, look, we're doing all these changes. This benefits you. You're going to get overtime. It's not a change in stature. We appreciate you. There's a lot of different ways that this can be done, but again, that really does depend on each employer, each employee, and what other changes, if any, you're making. Another question here, do you suggest all employees punch a clock? Yes. So even exempt employees, it is definitely best practice that employees accurately record their time. Exempt employees, I know a lot of people just 40 across the board, but implementing a policy that all employees should record their time is wise because, you know, if you end up having an employee who you thought was exempt but really wasn't, this will help alleviate the issue I was talking about before about employees exaggerating how much work they performed. So if you're not requiring your exempt employees to punch a clock, and for the last 2 years, they've been working who knows how many hours and maybe checking emails at night. If you don't have records of that, the Department of Labor or a court is going to go off the employee's memory of the hours that they worked, which are always going to be inflated. So if you can establish a policy that all employees record accurately the hours that they work, that's definitely best practice. If you're very confident that your exempt employees are exempt, you don't have to require that for an exempt employee. Punch clocks are a great way to do that. One thing that we've been seeing a lot of people do is scanning fingers, to enter the building or start work. It's a very accurate way to record the hours that are being worked. Do you recommend all non-exempt employees use a timesheet? Absolutely. I'll tell you this, that the law actually requires that employers keep track of an employee's time. It is not incumbent or required that the employee track their time by law. So you should have a policy in your handbook or elsewhere that says non-exempt employees have to accurately record the time that they start working, the time that they stop working, and all unpaid breaks. So if they clock out for lunch, for example, all non-exempt employees should use a time clock, a timesheet, a scanner, some way of tracking their time. Because in the end, if you do get sued, the employer is the one that has to say how much time an employee worked. And if you don't have that documentation, again, the Department of Labor, the court, would rely on the employee's statements as to how much time they had worked. These are great questions, by the way. So we are out of time. Thank you so much. It's a little bit past noon. Sorry to keep you. But thank you so much, everybody, for attending the second episode of our Third Tuesday webinar. Stay tuned. We will be doing these every third Tuesday. So I don't know what the topic is going to be next month, but please do the survey for us. Let us know what topics you think are interesting, what might be helpful to you. And, I definitely use that feedback going forward. So thank you very, very much, and have a great day, everybody.